The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have a chance, this is the 25th anniversary of the Hubble telescope, and probably one of the best scientific experiments that our country's ever attempted. But if you get a chance, if you could go into the internet and look at the Hubble telescope pictures, I mean, it's absolutely fantastic. And you'll notice that so many of them show those Fibonacci spirals of the cosmos. It's just really an amazing beautiful symmetry. If you look really close, you can find the Gartlys and the butterflies and the ABCDs, but you got to look really closely. I saw a bumper sticker here on Saturday that I almost had to stop my car and make it and laugh, because it was a picture of President Obama, and it said, "I have put us in the toilet. Hillary is here to flush." I laughed so hard I had to stop my car. Anyway, I enjoyed Basil's presentation, especially the part about the VIX index, the fact that, there's just very little, fear in the market at all. It's really complacency. So we'll see what happens. Now we have Apple coming out tonight after the market closes with its earnings, and I think Apple has about an 80% chance of opening higher after the earnings come out. So that's something that you have to take a look at it. And it's certainly gapped up again today. We made close to a double top up here with the earnings. It's suicide to try to do anything with that unless you did a put or a call, and I wouldn't even recommend that. I did on Saturday, because of the commentaries coming in. If you ever watch CNBC or Bloomberg, which I do, to check up on just overall news of what's going on in Nepal and Kathmandu and places like that, when they have major disasters. Colombia with their, Chile, was it? I can't remember the country. Was Ecuador? Someone had a big earthquake too. I think maybe it was Ecuador. Anyway, I like to see what's happening and try to see if some way that I could help somebody. But anyway, what I wanted to mention to you was Apple has got so much free advertising on these stations. It's just absolutely unbelievable. So what I did was I went down to the Apple store, believe it or not, and to see, and it was very crowded, and they did have a demonstration of the Apple Watch. And folks, the guy on CNB said that the Apple Watch was going to replace the Patek Philippe's, Rolexes, Cartiers, Bulgari, Vacheron Constantin, Patek Philippe's of the world, and that was going to be a big thing. Well, I looked at that Apple Watch, and I tell you, they could have given me one, and I couldn't have taken it out of the store because it was too hard for me to understand. And believe me, if you have one of those things and you're wearing it in the car, you're a danger. That's probably equivalent to having 4 martinis, taking a Apple Watch on your hand. I know it has a GPS that if you want to turn left, you're supposed to, it beeps twice. If you want to turn right, it beeps once. It's really amazing. But boy, I'll tell you, for cars, I don't think that that's really the thing that you want to have when you're driving the car. And if you get older, these little tiny apps, and I've never used an app, so I'm not very, complimented to me to talk about this, but these little buttons that they have for apps are very, very small. It's a very inventive thing. I mean, it's totally genius, but it's going to take a little while for this watch to get going. I know it's going to sell great at first, but frankly, and the battery life on it is not that great, but that'll improve over years. But it's a dangerous thing for if you're driving the car. And if you're, just doing your office stuff and everything, and you don't have other people involved, then it's probably okay. But boy, it's really funny. One of the functions that is interesting is that you can take the watch and put your boarding passes into the thing. You can put your codes to your hotel into the app. It's just really got a lot of cool stuff. But This ain't for this old cowboy, but remember, I was the last one to say that color TVs were here to stay. I did that in 1994. I knew color TVs were here to stay. Microwave ovens, I'm still not quite sure of those, so let's just keep in mind. Now, on to the serious stuff. Unfortunately, I have to disagree with a couple of the people that have been on as guests and stuff, but I have to go over some of these things that I'm watching for today. There's about 11 things that I think are important. I'm going to go through them one at a time. First of all, we've got a lot of cycles coming together between all of these related to cycles that go back 1974, 1982, 1987, 2000, 2007, and 2009. And that's basically what we're looking at. Now, I chatted with my friend and co-author, Shane Smolian, over the weekend, and he shared a interesting chart based on some probabilities that you might be interested in. If you'll give me a second to pull this up. And basically what it is, hold it, I want to move this so that we can see it better. You won't quite understand this, but basically what it's doing is telling you the probabilities of the market being up over the next period of the next 2 weeks. And as you can see, you'll see a lot of red, and then you'll see a little bit of green. It's 3/4 red, 1/4 green, and it basically means that about a 70% probability of the market turning down from now over the next 2 or 3 weeks, going into May 22nd. So that's basically, what you're watching when you're looking at that. So I think it's important that we, keep that in mind, because there's a lot of bullishness out there, and it's good because it has been bullish. There's no question about it. Now, the next one that Shane forwarded on to me that I wanted you folks to take a look at was the one that he gave us way back about 3 months ago in February about the aspects. And as you can see, that 26th and 27th peak that we have there, and then we come down into May 4th, and you'll notice that the bias is of these aspects are to the downside. Now, they're just probabilities. That's all they are. Probably doesn't mean much, but that's just a warning signal that we have. Going through some of these things besides the cycles, we have divergence in the Dow Jones. We haven't made new highs in the Dow. This time we have a head and shoulders pattern forming in the Dow Jones futures, because they have to get above, I believe, 18,200 to break that. The emerging markets are at 786 retracements. The Chinese market, which has been going crazy lately because they've allowed the Chinese to come in and buy Hong Kong stocks, has gone up to the 61% on the weekly charts. We've done the same thing with the Nikkei. So both of those are coming in. The IBB, the biotech index, is also lagging badly. The banking index is also lagging badly. We're not getting very much confirmation with volume, as Basil talked about, the on-balance volume. If you look at the advanced decline line, it is also not signaling that we're having a big up move. Another factor is that we have the Dow theory in progress here, where we have a non-confirmation of the transportations and non-confrontations by the utilities in a big way. I mean, these are far, far lower, than their highs. So that's another thing that should give us a little bit of caution. And these are just cautionary things. And one of the big ones for me is that we have the VIX index is at a butterfly pattern. We have the NASDAQ is at a butterfly pattern. If you look at the NASDAQ closely, let's just do this for a second, because we're higher today, which was not unexpected, because we were supposed to get up to this around at 49.40. The high was 49.53. But if we take a look at this NASDAQ, and we just did some simple time counts with it, you'll notice that from the AB leg, you had 7 days up, and the CD leg, today's the 7th day, and we're setting right at a 127, and that makes it a perfect butterfly pattern. That's really what it is. I've put the chart in for the New York Stock Exchange Index, and you can see that butterfly pattern is forming it. So far today, that has come within 20 cents of the exact, 20 points of the exact high that we're looking at, which was 12,000 and change in the NYSE index. So there's a lot of things telling us that we're into some possible, maybe there might even be a 1% correction in stocks. Who knows? Keep in mind, folks, that we have record margin debt. We have, bullish consensus is extremely high. It's a little lower than it was a couple of weeks ago, but it's still all-time record highs. And we had that volatility index sitting right there at a major bottom, and that's the one I think is going to offer the biggest return, very, very quickly. One other thing that's important is money supply. I know it hasn't made any difference over the past 6 years, but we've increased our money supply through quantitative easing by over 400%. History says this is not good. Also, we've had $1 trillion in stock buybacks over the past 14 months. When you add that to the $4 trillion that the Fed has pumped into the market, you're looking at something that has some possible really bad, as they say in the trade, unintended consequences. So we'll see if that's going to be the case. Well, that's my 2 cents worth, folks. All I can tell you is that we are at a real critical time. I've been looked at cycles, met some really smart people over the years. Quite a few of them are right here in the Tiger TV family. But we're looking at some real serious stuff in here these next few days. If we close lower today or tomorrow badly, then that's going to be the sign that this is probably topping out. And I'm not talking about a correction. I'm talking about something very, 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 very ominous if it happens. But the key is the March 11th date. When we take that out, boys, and girls, the fat lady is not only going to be singing, she's going to be dancing, and she's going to be doing a Wayne Newton routine where she plays the banjo, the saxophone, the clarinet, electric guitar, and piano, all in the same sequence of songs. So be careful. March 11th is the key to watch, because we get below that. I know we're quite a ways above it, but if we get there really quick and then break it, we're looking at something really bad, and there is going to be a crash coming because there is just too much complacency out there, folks. And everybody's talking about bubbles. Listen, they talk about bubbles when bubbles are happening. You don't know that bubbles are happening until they burst. And whether that's going to happen or not, we've got stocks that are up 10,000%. Hello, you don't have to be a rocket science to figure that out. That's not a good thing, folks. It really isn't. That's really not very good at all. We're going to have Bill Meridian from Cycles Research on as our guest at the half hour. He's a very, very brilliant fellow and a consummate astrologer. He does some of the best cycle work in the world, and he's also was instrumental in helping Alfie Lavoie build his titanium software. Okay, we've got a break here. We got the Dow up a little bit. We got gold moving pretty good, up over $20. We'll be back right after these words.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a quick look here at gold. On Friday, we came within 10 cents, of 30 cents of the exact Fibonacci level in gold. The low was 1173.40, and the Fibonacci number was 1173.10. So we missed that by 30 cents. So that tells me that I should probably not look at Fibonacci numbers anymore because they're not that accurate. Now, if we take a quick look at what's happened today, I know it's going to be difficult for some of you folks to see it, but what I was watching just from a technical standpoint was watching for a small ABCD pattern to form in gold, and it took about an hour to do it. It went exactly to the number that it should have gone, stayed there for a little bit, and all that's doing is trying to enter a position where you don't have to risk very much. So that happened to be at a 382 of the early morning low that it made about 5 hours previously, but that's a little short term, but that's one of the things you can use when you get ready. But that number Friday that we hit was pretty much spot on. The silver had made a really nice 3 drive to a bottom pattern on Friday, which was telling you that possibly it could do something pretty good. But the one that I think that's really important that I've been kind of keeping an eye on, and let me just share you with this because this is something that I looked at over the weekend, and that is the U.S. dollar index. And if I can find it here, I will certainly bring it up to take a look at it. Oh dear, there's what I don't do. I can't find it. Oh, shucks. All right, I thought I could find it, but evidently I can't. I'll try one other thing here just to see if I can get it. Pete, just to say, oh, I know what I did. I used the ETF. Just a second. There we go. Because we had a really nice pattern forming. We're almost there now. So we've got about another 3 or 4%. But if you'll take a look at this, was telling us that we were probably getting ready to see some strength in the euro. And that's the thing that I was sort of keeping an eye on. We made a perfect 786 2 weeks ago in that dollar index, and now we should be getting down a little bit lower, about another 2 or 3% would be the spot that I would be looking at. That would get us the probably up to the 112 level in the euro, because we're having a really big move here in the euro. So we'll watch it, very, very closely. It's interesting now that we've got stocks down just a little bit today. And of course, this is a key day, as we've talked about before. And we'll see if it's going to be, a reversal day of some kind. It's hard to pick reversals in these markets, especially something like Apple, because they'll come out and say, not only have we come out with this beautiful one, but they're coming out with a 15-inch screen for your wrist, which I think will be very interesting too. It'll be interesting how much the weight will be, but I think a 15-inch screen on a wrist would be just about normal. But for someone to say that Apple's going to replace Rolex and Patek Philippe and Bulgari and stuff, those boys are not playing in the same sandbox as everybody else, because people wear those kinds of watches for jewelry, and to say, not only have I made it, I've arrived and my chauffeur's outside, waiting for me. So that's different than the high-tech Apple people that actually do the, do the thing with the tech stuff, which this old cowboy is... he's not in that ballpark, and I never will be, so who knows. So anyway, we'll keep an eye on. Today's a real key day. The key here is that if we close higher this week than where we were last Friday, then this cycle is certainly wrong, and it's just not going to work. So you've got to keep that in mind. If we have a big reversal this week, then the cycle is working, and you can take a look at it. But you've got to watch the things that are happening, because they move around very, very quickly, and things can change, in a heartbeat. What would happen if maybe the Apple sales on the watch are not as good as possible? That's impossible to happen, folks, because they build those things in so that's got to be a win-win situation. That's the way those statistics are built, just like our home building numbers and just like our inflation numbers. I mean, you don't have to be a rocket science to figure that darn thing out. At least that's what I think, but who knows? But boy, they sure got a lot of things on that Apple Watch. I was really impressed. I wouldn't be able to use it, because it's too many levels above this old cowboy's pay grade. That's for sure. We want to keep an eye on what happens with the watch, but the battery life is another problem with it. But it's a nice little trinket and a toy for the man who has everything. Take a little break. When we come back, we're going to have Bill Meridian of Cycles Research on.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I think we have our friend Bill Meridian from Vienna, Austria on the line. Bill, are you there?
Yes, but I'm speaking to you from New York City today.
Ah, you get to travel a bit, huh?
Oh, I'm here until June.
Oh, wow, that's good. Bill, we're going to start out with your
Sure.
BAI cycles chart. You want to go through, we've got a set of 7 that I'd like to run through.
Yeah.
You hit the crude oil spot on when you were back on February 4th. You were looking for a really good rally, and I think 27% certainly constitutes a good rally. So maybe you can give us some good information of what you're looking at in stocks right now.
Okay, well, let's go through the graphs. Shall we go through the graphs first?
Sure, we have graph 1 up right now, and I can put them up in order, so whenever you're ready.
That's a longer-term view. Well, the 6-cycle composite that you see at the bottom was actually run way back in the year 2000. Then it was updated in 2007 or 8. But that is the very first software program we came out with. And it was designed to extract cycles out of any price data and then project them forward, which was new and revolutionary in the mid to late 80s. The index that I performed that operation on is the Business Activity Index. And Larry, I believe I sent you one of those long fold-out graphs a while ago.
I sure liked it very much. I sure did, yes.
Yeah, and Ameritrust Bank took any type of economic data they could find going back to about 1780 or 1790, and they strung it together to create some type of an index, so at least we have some idea of what the economy looked like 50 and 100 and 150 years ago. And I fed that all into the system and made the projection that you see at the bottom. And quite clearly, it identified the top in the 2007-2008 bubble, and then that long decline down into 2010. But then the cycles, there were 6 main cycles between 20 and 36 or 38 years in length. They tested out as being the most effective. And that cycle line you see is the composite of the 6. Now you see it looks flat. And I pointed to 2015 there, and it doesn't go up till 17. And well, people, I was at a dinner in England, and they were asking me, they said, well, that's flat. Why would the economy stay flat for that long? And here's where fundamental analysis and thinking on your feet comes in handy. I said, well, they'll probably elect a president like Carter as someone who is definitely not friendly to free enterprise. And that is going to restrain the economy for quite some time. So, well, why should it rally? And again, thinking fast, 2016 is the presidential election. Either someone who is friendly to business or perceived as being friendly will be elected. And to go to backfill now, I said that the Republicans or people who are perceived as being more conservative financially will get elected. And then when I saw the oil price forming what I thought was an Elliott wave top back in the summer, I said, aha, this will put more disposable income in people's pockets, and the regime uncertainty, which means you don't know what the Obama team is going to do next, will start to clear up. But I really feel the election is fairly key, and whoever comes across as making the most sense economically will get elected. And that is why we'll have that next big rally. And that's been my contention now since, the late 90s. I've been working on the same graph. So can we move forward one?
We're on number 2 now. That's our short-term business activity index.
That's the same index, but that's the very short term. And at the moment, the dominant cycle is 40.4 months from trough to trough. So at the moment, as you'll note, it is turning down. And if you go back and take a very close look with a magnifying glass at the longer term, you'll note that it does not go up in 2015. So therefore, I had been advising people that the economic numbers are not going to come in as being positive this year. And there's another very good barometer. Simply go around New Jersey, New York, Connecticut, and talk to people, and they'll tell you that the economy isn't improving any. That indicator used to work really well with New York City taxi drivers, but it doesn't work anymore because they no longer speak English. So,
well, that's true. That's where Arch got most of his information when he drove a taxi.
That's right. Yeah. So now if we advance to the next one, well, why is this occurring? Well, that is the velocity of M2, the number of times that the money is turning around in the economy. And this is a long-term view with a bottom in 1946. So in other words, people tended from 46 to 97 to be fairly loose with their spare change. They tended to spend it. And since 97, for some reason, it started turning down, and it's still going down. And I do have a running argument with a professor who's an expert here, and he says, yes, but he said that it's about as adulterated, that number, as American ice cream, and you really can't rely on the numbers anymore because they fudge with it so much. But this is the reason. So if we move forward to the next one, so my whole contention then, people at this point, by the way, this presentation comes from being in Abu Dhabi, London, Tokyo, Vienna, or wherever, and having people ask me all of these questions. That's the reason I already have the answers. And then they'll say, well, the economy is improving. This is before the last round of reports in the last month or so. So for that, I rely on John Williams at Shadow Stats, which is an excellent service. John simply maintains the integrity of economic numbers by stating them as they used to state them. So right here you see the official unemployment rate in red, which is about 5%. Then you see the broadest, which is U6. It includes people who are discouraged, not necessarily looking for a job. It is a broader classification, but the blue line is how they used to compute the same number back during the days of the Clinton administration. So it has nothing to do with the president. It has to do with the Department of Commerce having altered the way they compute the numbers. And look where it is. It's at depression levels. It's up at 23%.
Yeah.
Wow.
So
if you go all through, if you go to Shadow Stats, I believe this graph is just open to the public. You can see it there. I'm a subscriber, so I go through all of those numbers, and he simply restates them in the old format or tells you how they've been distorted and why you shouldn't rely on them. So the economy, the overall BAI cycle is correct. The economy is not recovering. And how is the stock market going to react, which was your question? And I always begin with the one-year cycle, which is the seasonal cycle, and the four-year cycle, which of course is the presidential cycle, and the 10-year cycle, which is the 10-year cycle or decennial cycle of Edgar Lawrence Smith. And so here you see the 10-year cycle is in pink. It is still going up. You see the 4-year cycle in blue and the annual cycle in green. And at the bottom, you see the composite or the sum of all three cycles. Now, I have been doing this for years and years and years. And Larry, we discussed last time, I worked on Wall Street. I did research. There's an old saying, if you've worked in the kitchen, you will never dine in that restaurant. And I've been in the kitchen. And when I was in Abu Dhabi, it's the largest fund in the world. They claim to have $500 billion in assets. I can personally tell you it's well over $2 trillion when you add up all the companies that they own and what they own. And we had everybody come out there, the cavalcade of experts, and, you know, they got the same education I had, and they give you an educated guess. And I find that doing what you're seeing, what you're looking at, was born out of me sitting there saying, you know, I respect this guy, he's got a PhD, but I think there's a better way to do it. And so at the bottom, you see the composite of all three cycles. And in late 94, it was a year ending in a 5, which is the strongest in the decennial pattern, and it was pre-election year, the two strongest parts of the 4 and the 10-year cycle. And my market analysis for the entire year for the Abu Dhabi Investment Authority, North American Bond and Equity Department, was straight up during the year with probably no serious corrections. And we had only one correction of 5%. And this is how it was done. I've been doing this for years. I layer other cycles on top of it. But as you can see, it points to perhaps no serious correction until we get out to September, which is traditionally the weakest month anyway. And right now it shows you a pullback in May and more or less a trading range until we get into July. Now let me stop and go to one of our favorite old subjects, Larry, and that is, how can you improve this? Well, I always say to people, look at the green line. That is the annual cycle of the year. Do you have any quarrel with that? You know, the market is usually strong in the spring, weak in the autumn. September is the weakest month. June is the second weakest month. And they say no. And I said, how do you get that? And they say, well, from a calendar. I said, where do you get a calendar from? It's the relative position of the Earth and the Sun. So therefore, why can't we add in more such cycles? You guys already said you believe in it. And so if you take the Mars cycle, which is 1.8 calendar years long, the market usually bottoms when Mars is in the central decadent between 10 and 20 of Taurus, and it usually tops when it hits 0 Libra. And W.D. Gann made much about the solstices and the equinoxes. Well, 0 Libra is one of them. And I did a test that was very disappointing, just trading according to that cycle from 1915 till I think it was 85. But I then went back to the drawing board and I said, well, what happens if both cycles bottom together? For example, if Mars hits the central decadent of Taurus, its low point, at the same time the solar cycle hits its low point, what happens then? And the answer is the odds of a higher market 90 days later are 10% higher than they are if you're only using the annual cycle. And if anybody out there is wondering why, you know, Larry and I or other folks would use planets, I just gave you a value-added reason. Now, if Mars hits 0 Libra in the summer months when the solar cycle tops, your odds of a lower market 90 days later are again 10% higher. And starting from that point, you can start layering on cycles, and you can go bananas, and many of us have, trying to layer this stuff on top of it. So right now, Mars, as I'm speaking to you, is in the central decadent of Taurus, which is its low point. So your odds now of a higher market 90 days from now are 10% higher than they normally are. So that is how I add cycles on top of this one. But at the moment, I'm long, and I want to, if we can advance this one more.
Sure. This with the advanced decline?
Yeah, if this is kind of hard, you have to take a deep breath and look at this chart. This I got from my friend Peter Eliades. This is the annual New York Stock Exchange advanced decline line from 1926, and it's expressed on an annual basis. Larry, do you see any sort of a high here? Because I sure don't.
Well, Peter happens to be a good friend that I've known for just about 50 years, and I respect his work as much as anybody. You're right. Just looking at this chart, it doesn't look like there's much here.
And what's really incredible, and Peter said, you won't believe this, Bill, but look at the bull market of the 1990s. that's where we made all that money, and we're all such hot shots. And look at the advanced decline line. It peaked in 97, 98.
Yeah.
And it was Ralph Acampora who used to say the generals are leading this rally. Where are all the troops? In other words, it was a small group of high cap stocks that led the rally. And in fact, I was reading Barron, some small cap fund manager said in the late 90s, we almost went out of business after 25 years of doing small cap because nobody bought them. And now look 2000 to date. Now look at it. This tells you most stocks are advancing. It's not just the big caps, and that's the reason it's so hard to outperform. Most stocks are going up. So how do you pick the ones? How do you differentiate one from the other?
Yeah.
So that's a pretty incredible chart. And if you look at it now, if you just go to Reuters Metastock and look at the AD line now, it has just hit a new high if you look at it daily. And if you look at the global advanced decline line, it has hit a new high. So the economy, here's my summary, is the economy is in trouble. The only thing the educated people know are John Maynard Keynes, let's inflate the currency and issue more credit. The joke used to be that they can't print more paper money, they'll run out of trees. Well, now we have computer-generated credits, and the legal barriers to issuing credit are just removed. President Carter, in June of '80, signed the Monetary Control Act. There's no limit to what they can monetize our American Express debt for the month. They can buy anything and put it on their balance sheet as an asset. So my contention is, as my economics professor said, a minimum wage is a great idea. Give everybody $100,000 a year. Bread will be $50 a loaf, but everybody will have $100,000 a year. And so that is the direction I think we're headed in. And I'm leaning more toward a scenario in which Japan is right now. It has been since the early 90s. And I don't think there's going to be a big 1930s style crash and depression. I think we might have panics like 07, 08. But let me just see, if you can advance it to the next slide.
That's the last. I think that's the last one I had. Let me double check, Bill. Hold on, because I'm not the smartest knife in the drawer, and I want to make sure.
There was a seventh one.
I just did the seventh one. I put that. That was the advanced decline line. Was the seventh one that I had.
All
Let me check here. I only had 7. That was the last one I had. Oh, I think the last one is there. It is, the panic cycle. Sorry, Bill.
Yeah. Okay.
And we're going to have a break here, but stay with us till after the break here. But this is the panic cycle that you're looking at right now?
Yes.
Okay. Go right ahead. It's in there.
Oh, okay. I thought we had some sort of a commercial break. Okay.
No, they'll tell you, and it'll be in a few seconds. But when we do, I'll just interrupt you, and we'll come back after the break. This is a really interesting one here.
So next question is, people would ask, well, okay, wise man, again, this comes, I love to get bombarded by questions. It's sort of like, boxing practice, you get better and better. I went back to 1600 and I coded each month a 1 for a regular normal month and a 2 for a panic month. Now, needless to say, by far.
Okay, hold on, Bill. This is our break. Come back. We're going to be back with 3 minutes. Okay, stay with me, please.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back with Bill Meridian from Cycles Research. Bill, we were talking about this panic cycle here. Do you want to finish up?
Yeah, so there was no barometer. If you read the 1902, 1903 book by Professor Theodore Burton, and he defines commercial crisis, panic, and other terms, and I've always used those terms, and he said a panic is a sudden general fright that causes people to do all sorts of irrational things. There is not necessarily a fundamental cause. It's like the night my wife dropped the frying pan and all the cats scattered for different corners of the flat. So I took months from 1600, and they were either number 1, which is no panic, or number 2, which is panic. And I extracted this from my library, which I have here from the internet, from books. And anyway, what you see here is the most powerful cycles plotted: 8.5 months, 12.9 months, and 15.5. So the red line is the composite of those 3 cycles. Those are the ones that currently test out as being the strongest. And since I put this together, it did hit a peak within 1 month of the crisis in Cyprus, and it also hit a peak when they were talking about shutting down the U.S. government. And in order for this to be really dangerous, you see it has an index of 2.0 at its peak. It has to get up to 3. That's where it was during the Depression and during major crises, 1937 and so on, 2007, 2008. So 2 is high, but it's not that high. But you'll see it bottomed out, minimal anxiety, rising concern, and it peaked last month in March. Now it is declining. And so when people ask me, Bill, should I be concerned about Greece? My answer is no. I'm looking at this thing. And by the way, 1/3 of all panic months occur in the autumn of years ending in 7 or in 8. So if you say the next panic is in 017 or 018 in the autumn, you have a pretty good chance of being correct and doing nothing else whatsoever. And yes.
Oh, I have a question about gold, Bill. What is your feeling on gold?
Well, you're right now in seasonally the weak time of the month and a weak time of the year, and I don't think it's going to do much but trade in a range. And I think on the downside, I doubt it's going much below 1150 and 1180. And the reason comes from my friend in London, Tony Plummer. Tony says that is a 38.2% retracement of the entire move up from the 30s up till a high of 2011. And he said if it goes below 38%, that means there's some fundamental shift, like governments are going to stop creating debt and stop inflating the currency. And I said when I was speaking in Abu Dhabi, I expect to see camels fly before that, and everybody in the room said they expected it well before that.
Now, Tony Plummer, he's the Elliott Wave fellow out of the UK, isn't he?
Yes, he is.
Yeah, he's a pretty smart boy. I met him a few times, yeah. So he thinks that gold still has a chance to go higher as long as we stay above that 1150, 1140 area.
We both feel that if it gets down to that level, you can buy it. And we don't think it's going much below that level. That gold, if you think of it this way, as we know, the price of gold was controlled up until the 60s. And as we know from Dr. Gary North, the minute you take off the price controls, it's going to drastically overshoot its fair value, and then it's going to come back again. And I think that's what happened. And in fact, if you take the 20-year bear market and multiply it by 0.618, and you add that on to the gold low in 99, you come up to exactly September 2011, which was the high. And so right now, I just think they're not going to stop inflating the currency. That is my opinion based upon reading mass psychology. Therefore, you're going to have more and more and more and more credit. And now we're talking about the study of Cantillon effects. Cantillon was the first guy to realize that the king's friends were the first ones who benefited from inflation of the currency because they knew what was going on and they positioned themselves accordingly. And as I tell all young graduates...
Oh, Bill, we've hit the clock on the wall, buddy. Listen, we'll have you on next month, okay?
If anybody would like a copy of the BAI Index, if they could send me an email, bill@cyclesresearch.com, and put BAI and put your physical mailing address in there. Because
I'll put that into the room so that that's be posted for everyone to see, okay?
I'll mail it to you before June, because after that I'm out of the country.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 27th and May 5th that only subscribers to his opening call will gain access to. On April 27th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
You're watching Tiger TV.